Micron moving higher. It's actually our biggest gainer on the S&P this morning, up just about 10%. It seems like it's going to give some more confidence to the AI trade, but it's been a bit wobbly. How are you viewing this Micron report and then some of the other concerns, whether it be Amazon and its potential deal with OpenAI or the Blue Owl Oracle situation? How are you viewing the AI trade as a whole right now?
Yeah, I would say zooming out, I appreciate the skepticism the market is levying at some of these deals. I think the sign that we're not in a bubble is the level of skepticism levied at OpenAI from their debt deals, from some of these more questionable circular spending deals. It certainly hasn't stopped price gains in some of these stocks. AI is still, in our opinion, a transformative technology. But I think the thing that keeps this bull market from at least being a bubble yet is the very healthy skepticism aimed at some of these deals. I would also say, as we move into year 4 of a bull market, the dispersion between winners and losers, and particularly as we focus more on the fundamentals rather than just a rising tide that lifts all boats in multiple expansion, is natural. So you're going to see your winners, the ones that are growing earnings and providing good guidance, and you're going to see your losers. Oracle kind of lumps in that later category right now.
All right, so how does healthy skepticism work with what some people believe is the unhealthy concentration in the market? If you're looking at AI stocks, they're now 46% of the S&P. Just for reference, if you look back in 2022, same month, it was only about 27%. So if we have healthy skepticism, how does this bull market continue when so much of the market is tied to AI?
Yeah, well, I would say look at the last 6 to 8 weeks, right? AI has been under fire, and we've still seen some nice market gains, especially in the equal weight, the Russell 2000, and abroad. So it's been a pretty broad market. Obviously, the concentration can obscure what's going on under the surface, but for stock pickers, for people who are not just passively invested in the S&P, you've seen strong gains from things like industrials, financials, consumer discretionary providing a spark of life, and as was mentioned earlier, abroad. So it has been a broader market than I think the headlines would indicate. And I think that's really healthy heading into 2026 when we expect the fundamentals to kind of follow in suit.
All right. How do we just judge where investors are when it comes to risk in this market? It seems like the AI trade's got a bit riskier. Wolf actually out with a note saying a crypto winner's coming. Is Bitcoin and cryptocurrency, is that something we should be looking at as a gauge of sentiment and the direction of the market? We had people like Tom Lee telling us just a few weeks ago that, well, crypto leads, it actually leads the market, at least leads the NASDAQ. It doesn't seem like that correlation still exists.
Yeah, it's tricky. I mean, I've typically thought of Bitcoin and crypto as both a little bit of a sentiment and a liquidity indicator. And I think that the story of 2026 is going to be about abundant liquidity, both from rate cuts and from a lot of stimulus coming from the one big beautiful bill. So I do think that there could be a boost to some of those more liquidity driven assets as we move into 2026. Sentiment for me is the biggest near-term risk to the market in Q1 in particular. If you look at the survey data, we're getting bullish. If you look at some of the IPO headlines, I mean, that certainly has a correlate to the late 90s. That screams bullish. And then if you just look at the strategist sell-side targets, I mean, S&P 8000, S&P 8200, these are the kinds of things that start to raise, flags in the head. I don't think it's a structural risk, but near term for sure will reset things. And then I think the bull market continues into year end. All
right. JP Morgan is actually out with his 2026 outlook. One of the things they talk about is the weakness in the labor market. Another issue potentially could be inflation. We're going to get that read coming up later today. As you look at the equity markets, not the economy, but the equity markets, how concerned are you about potential stagflation or at least considerable softening of the labor market while inflation is stickier?
I think it's a concern, but at this point, the market is pricing in 1 to 2 more rate cuts. So it's not like the market is entirely dependent on the Fed easing narrative heading into 2026. So if inflation proves a little more structural or sticky, as we've seen, and the Fed decides to be a bit more hawkish than is priced in, that'll cause some volatility and some chop. But I don't think it's the biggest thing that the bull market is built on. Especially as we've gotten through most of this rate cut cycle, we're down, 2 percentage points. So I don't think it's the biggest, tailwind to the market at this point. As far as what we're watching, oil prices right now kind of plumbing 4-year lows, I think are really important, more so than the headline CPI number for consumers.